Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abati. Good morning, Vimbai. Good morning, Rufai. And good morning to all our viewers. We're kicking off with where you just left off in the U.S. Trump's, chances seem to be improving based on polls, and we're seeing global asset managers beginning to, reprice, readjust, recalibrate their portfolios in anticipation of, again, when you're investing, you have to hedge against an outcome either way. So if you look at a little list that we've put together, what we've observed that's happening in the global markets is that basically you're seeing portfolio recalibration with a number of asset managers. So there's been a steepening of the yield curve in the U.S., and just to explain what that is, so 10-year Treasury yields are climbing, which means, and then there's a inverse relationship between the yield on Treasury and its price. So if people start selling them and the price is going down, the yield on that Treasury bill is going to go up. On the short, that's on 10-year, that's the long end of the curve. On the short end of the curve, we're seeing the opposite take place. So they're anticipating some volatility in the Treasury markets, and so basically investors are buying shorter tenured bills, which is impacting the yield curve and basically making it more steep. You're also seeing the US dollar strengthening since the debates, and one of the justifications for that, the reasons behind that, is that Trump's policies, if he were to win, would be inflationary. I mean, he wants to cut taxes, but he also wants to slap tariffs on goods, and basically Goldman Sachs put out a note saying that, and even JP Morgan, I believe as well, saying that would be inflationary, which would cause the Federal Reserve to hold off on cutting rates and basically keep the US dollar strong and more attractive at a higher level. And then, of course, being a Republican, you would get looser regulations in order to try to free up wiggle room for businesses, particularly in the healthcare sector. So, traders are looking at healthcare stocks. They have to begin to pick up stocks there, and also energy stocks. Trump, as you know, is a fossil fuel drill proponent. So he's not that keen on the electric vehicles, and he says the climate change thing is a hoax. Remember, he pulled America out of the Paris Climate Agreement. That was one of the things that was talked about. So you would see a readjustment from cleaner energy renewal equities over to the fossil fuel side. So we've got some quotes here. First off, from Gennady Goldberg. He is the head of U.S. rate strategy at TD Securities in New York. He says markets have already been repricing U.S. election odds since the debate. So the news over the past 24 hours has recently only added fuel to the fire. That's, of course, what John Cookson was talking about, the meetings with the governors, the big interview he has tomorrow, whether or not Kamala Harris will apply. But Dr. Abati asked a key question, and the answer to his question is no. I mean, there's a lot of racism and sexism in America, so I don't see Harris winning if she was to take over from Biden. Also from Joyce Chang, she's the head of JP Morgan Chase and Company, strategist. Here's what she said, a Trump victory raises the prospect of higher inflation and a stronger dollar, given his promise of more tariffs and a tougher stance on immigration. Also from all the way in Sydney, in Australia, Rodrigo Catril. He's a currency strategist with National Australia Bank. He said everyone is preparing trading plans in case Biden ends his campaign. Of course, as we've heard, Biden is not doing that. But he says either way, whether he ends it or not, the market is betting on Trump winning the election. It seems Democrats are stuck with very difficult choices, none of them easy, and none of them likely to yield a better outcome. So it is very interesting. It just reminds me of 2016 when Vimbai was saying Hillary Clinton looked inevitable when she was going to win. So we'll see how things turn out. But that's how the markets are reacting to a possible Trump victory. We come to Nigeria, an extension of the discussion that we had yesterday on Aliko Dangote and a number of people wanting lower interest rates. But there's a competition for that, right? Are you going to sacrifice lower interest rates for growth? We spoke with Ibuku Omoyeni. He's a sub-Saharan Africa economist with Vetiva Capital Management. Here's what he said.
I like this point because when you look at the US also, you find out that the President Trump, when he was in office, was also advocating for lower interest rates.
Right.
So it's not unusual to see the fiscal side advocate for low interest rate. But we need to see the fact that the CBN has a goal. The primary goal is price stability. And the way economics works or monetary policy works is that they are competing economic objectives. So in trying to solve one problem, you might be causing another problem elsewhere. So you find out that inflation and growth, for instance, are conflicting. So to bring down inflation, you might sacrifice some growth in the short term. And what we saw in February, March was unprecedented. We saw exchange rates go to as high as 1,006, 1,008, due to the policies of the CBN to raise interest rate and make it attractive for foreign investors to buy our assets.
And the money came in.
The money came in,
yeah.
Exchange rate appreciated.
Right
Now we are at 1.5, but I tell you that if we were to follow that trajectory of 1.8 by February, we should not be at 1.5 by now. So there's significant place when it comes to FX, and that FX stability would, in the near term, also feed into growth prices, right? So you just have to look at the balance of the two, right? The central bank has to focus on hitting that FX point, and it has to do so by raising interest rates. Over time, once inflation begins to moderate, just like we see it do, we believe that probably by 2025, there will be room for rate cuts in Nigeria.
All right. Finally, with the rain that we've seen here, has anyone discussed the impact of flooding on productivity? We all internally know members of our staff that were impacted yesterday that couldn't make it to the office on time. Some people couldn't even leave their homes. I know you've already shared some images, but just to add one more, here is this drone shot, I think the Osakpa Lekki area, just to give you a scale of the kind of flooding that we saw yesterday. Infrastructure, productivity. That is our updates for today.
All right. Thank you so much, Rotus. Couple of things. Number one, when you check the Republicans, their playbook doesn't change. The only difference is Trump is pretty much a hard-right Republican. They believe in trickle-down economics that does not completely work. They'll cut taxes for the rich, and they'll think, and they'll, what did you say?
And a convicted felon. It's
okay, convicted felon.
Okay,
convicted felon. Yeah, that's also. So they'll cut taxes for the rich, and when they cut taxes for the rich, they think when the rich has more money, then the rich will create more jobs and make their society better. But it doesn't work. I'm not a fan of trickle-down economics. I've always believed that. And that's why I slant towards what the Democratic Party does. The Democrats does, social capitalism of some sort. Let's give the money to people in programs. Let's aid them. Just like the Labour Party too believes in the UK. So when you look at it, that's pretty much, I favor that ideology of thinking. And it's also going to be worse off at a time where America is still trying to make a very big recovery. And that's why the Democratic Party is in dire strait. But you ask a question, and I'm also going to give you a poser. You said America ready for a woman president? Yeah, based on the sexism and racism that goes on in America, it looks like it's not ready. But let's not also forget, Hillary Clinton won the popular vote. Yes, America functions as an electoral college, but Hillary Clinton won the popular vote. That should count for something also in this debate. But I do not think Biden can deliver across the line. Rotus, if you're a betting man, if I was a betting man, I should be a billionaire by now. Recall when I predicted the Trump victory. I didn't see this debate coming. I didn't know it was going to be quick. Once again, I will predict a Trump victory in this coming election.
There's a lot of people gambling on this election already. I believe what are they called? The betting associations, or the gamblers. The gamblers are very busy in the United States at the moment, including within the political circles themselves. But I want to focus on Nigeria and this continued conversation that's going on between inflation and interest rates. And as a student of economics, you always kind of revert back to orthodox economics and what should happen when inflation goes up, and what you need to do to interest rates, and what you need to play with, the tools available to amend monetary policy to impact economic indices. However, there's one huge elephant in the room, Rotus, and you're always talking about this, but I don't think we're making enough of an emphasis on the census. The importance of a census to this conversation, because population demographic is a massive contributor, factor to how we manipulate our monetary policy. So it's one thing for us to focus on fiscal policy and is the government cutting spending and so forth, but we don't even know what our population demographic trends look like. I want to go back to World War II when there was a baby boom. So when there was a baby boom, then life expectancies drastically increased and birth rates declined. And that created because suddenly the workforce just ballooned. There's this massive demand and there was a supply shock after World War II. So if you're in doubt about how important it is to understand the trends of your population demographic, who is who, how many people are being born, where are they, how many people are going into the workforce in the next 5, 10 years and so forth, those are massive numbers that are central to how we tinker with our monetary policy. So I just wanted to say, let's not leave out the issue of census from the conversation when we're talking about inflation and interest rates.
Okay, very quickly. Let me start with Nigeria. You brought the point about floods. Well, it's a no-brainer that the flooding that we have seen would affect productivity. And in fact, we are in a situation now where Nigerians are doing flood comparisons. We used to hear of Ogijo, the local places in remote parts of the state, Lagos and Ogun. But you have brought the example of Osaka, London, which means that nobody is spared. So it affects productivity, of course, because yesterday we saw that many people could not move freely around the city. And NIMET is even predicting, NIMET is the Nigerian Meteorological Agency, that there will be 3 days of rainfall in the southern part of Nigeria, and as a result of that, there will be a lot of flooding. And then in the northern part, there will be thunderstorms for 3 days. Well, is it climate change? We don't know. Is it due to lack of infrastructure, as you try to suggest? Well, we can put our finger on that, not being scientists, that is part of the problem. But the scale of the problem is so big, so large, that solving it, we take years. It's not a thing that one administration can be blamed and we say, oh, your administration is not functioning. Now, talking about, interest rate. Yes, Alhaji Aliko Dangote was saying 30%, 26.5% is too high for business. But this interest rate thing, I think it's relative. Why is it that in Argentina, which has one of the highest inflation rates in the world, they have the interest rate of, in May, they had 51%. Now, June now, I think it has reduced to about 40%. Now, it's not an issue there. Now, Turkey has an interest rate of 50%. And in fact, the Monetary Policy Committee meeting, the last one and the ones they are going to hold in September and December, the central bank in Turkey is saying they will stay with 50%. Now, in Nigeria, we're complaining about, 30%. What is it that is wrong with our economy? That it doesn't have an absorptive capacity. And even worse inflation rates in Turkey and Argentina can absorb interest rates. Do you want to respond to that? It sounds like an academic question.
Yes. No. Well, I mean, Doctor, those are your two examples are quite out there. Erdogan, first of all, was the reason why. Yeah, there are two outliers. There are two outliers. Erdogan in Turkey, first of all. Exactly. He turned monetary policy upside down and almost destroyed the lira in Turkey. And Argentina is a basket case. Nigeria has structural issues. It's just structural issues. When you think about high interest rates, look at if you run a bank, right? Your bank branch. How much does it cost you to fuel your generator to keep your branch open? There's also the issue. Remember when the vice president, the asset registry bill was passed back in, I think it was Vice President Osibanjo passed that bill in 2017. Movable asset registry that's supposed to make it easier for banks to be able to track assets for collateral purposes hasn't really moved. So you still have high default rates in Nigeria. That's something else that needs to be looked at in terms of data that links people to collateral that banks can hold on to when they default. So high default rates, high cost of doing business, also, structural issues. These are kind of the things we have to address in terms of trying to get interest rates down. And as has been said, the currency is another issue, but Argentina, Turkey.
Well, maybe I should cite the example of Japan on the issue of orthodoxy, and Turkey also with regard to orthodoxy. But thank you very much. That's why I said it's an academic question.